Well, good afternoon once again, guys, to this week's Elliot Wave weekly analysis webinar, where we go through the charts to forecast the week ahead. Okay, we're going to cover a couple of charts. Right, so I'm set now, yes. Let's get started. So I've been getting a lot of questions from people who have been watching my videos on YouTube, asking who trained me, whose student am I, and all those kind of questions. So although I don't like to use this platform to address those issues here, if you wanted to know any information about that, you send me a private message and I'll explain to you. But having said that, I mean, we are living in the information age. I mean, information is so inundated these days that any information that you need is right on your fingertip. Whatever you want to learn, whatever you want to know, it's all on your fingertip. You just Google and find any information that you want. So this is the information age. So the challenge with this generation, or the age that we currently, the era that we're currently in, it's not lack of information, as I've said, but it is to filter the right information from the wrong information. That is the challenge, and that also applies with the Elliot Wave theory. This theory has been developed in the 1930s by Ralph Elliot, and it is freely available on the internet. The summary is freely available on the internet. If you just Google, you find tons and tons of information on the wave theory. So anybody can learn and study it. But the challenge is, who certifies you competent? How do you know that you understand it properly in order to trade it properly? That is the challenge that we have. So as much as we've got all this information, you still have the challenge to actually say to actually filter the right from the wrong. So I have learned the theory, and I'm not going to say I've learned it myself, because if I say I learned it myself, that would not be inaccurate. That would be inaccurate, because I've learned like anybody else who would go on Google, YouTube, every video. I think I've exhausted YouTube, I've exhausted Google while trying to learn this theory. I've even paid somebody to teach me the wave theory, and I've paid 7,000 rands at the time, and I think 7,000 rands in dollar terms, that is about $700 for that course, in order for that person to teach me theory, because I saw some of his wave theory charts. I thought he was actually good. I went there and they was teaching me things that didn't make sense at all. Even today, this person is still posting charts that don't make sense. Okay, so you just need to make sure that whatever information that you are searching, that you are Googling, you are applying it correctly, or it is the right information. So I have learned the theory like anybody else, and I believe that I've got the right interpretation. Okay, so if you wanted to know my background and all those things, send me a private message. I do what I do here for free. Any additionals, if you wanted any additionals, if you wanted to be trained, to learn, then you can send me a private message. You can email me, you can text me, and all those things. You don't have to do it on YouTube, on the YouTube videos. If you like the videos, just like and text me. So I don't like to use this platform to address those issues. Right, so the theory is for everyone. It's there on the internet. It's free. Anybody can read it. Anybody who asks me for the book that I've read, I usually just send them the PDF that was written by Pexter and that other guy as well. So this is all free, guys. Right, so read and filter out the right from the wrong. So what I have done with the theory, when I studied it, you know what they say about it being subjective. Okay, so there's a difference between a theory and a theorem. So what is this difference? So again, this is the definition that I got on Google, and it actually makes sense. So there's a theorem, which most of us have learned from school. So a theory is a result that can be proven to be true from a set of axioms. That term is used especially in mathematics, where axioms are those mathematical logic and the systems in question. And then a theory is a set of ideas to explain why something is true, or a set of rules of which a subject is based. So that is the difference. The difference is the theorem is something that has been proven without any doubt and has been accepted to be true. For example, if you're saying complementary angles of a right angle triangle are so much, everybody has, that has been proved, that has been researched, and has been accepted as fact, basically. And then the theory, we use the Elliot Wave theory. So the theory, on the other hand, is just a set of ideas. It's a set of ideas of which a subject is based. It's observations. That's what Elliot did. He observed and noticed trends on the market. Okay, so this theory is not fixed. That's why people say it is subjective. So what I have done for myself is to make it fixed, to put in rules that enables the theory or the strategy itself to make decisions for me when I trade. Because if you have a strategy and you still have to decide on your own whether it is right or it is time to enter, time to exit, then you are trading emotionally. You're not trading technically. So you need to trade technically and not emotionally. And if you're going to make technical mistakes, that's acceptable. But don't make emotional mistakes. Okay? Right, so now let's just get into the charts. We'll start with the dollar index. Start with the dollar index. We've been following this for a couple of days now. And we've got this impulsive move to the downside. This is the 4-hour chart. I'm on the 4-hour chart as we are right now. Just get the pen out, get the yellow color. Right. So you've got this, you can see that we've got this 1, 2, 3 in red. That is not completed in red, yeah. And inside we've got the green internal wave 1, 2, 3, 4, 5. So we still need to complete this one in red here. We still need to complete the red with 5. That's how we're analyzing it. So we need to know when this is going to end. So let's go into that and see how that is doing that. This corrective structure, which is wave 4, how will that end? Because when it ends, that's when we need to take the trade. So I'm going to zoom in there and try to see what is going on there. Okay, so here is what is happening here. This is the dollar index. You had this impulse here, you've got this correction here. Okay. You've got another deeper correction. Yes, if you watch last week's video, I went through all the corrections that you find that Elliot has identified. So here we've got a zigzag. Here you've got an expanding flat. Okay. So what is happening here is you are getting something like this. Impulse, deep correction, and another impulse. So I anticipate that we may get something like this here. Maybe I should have done this one in green because it's in a lower degree than this one. You can see that this one is bigger. It's correcting the whole string. This green is only correcting this first string here. Okay, so here you may get another green that does something like this. You can see here we're getting this that does something like this before we get the final move. Maybe before we get another move to the upside. That's a possibility. Okay. And then that will then complete. So there's a possibility that we drop first to the trend line and we push up. So if we're dropping here with an impulse, it's just completing this correction in green. Okay, so and then we can have this last move to the upside here before the drop. So if this move that is currently happening here, or the last move to the upside, is exactly the same as what we're waiting for on the euro US dollar. Okay, we're going to do euro US dollar just now. So this is the possibility on the dollar index, right? So if you look here, you would have something like this, and that will look like a zigzag. So you will see that here I've just done the patterns, and I've not even labeled it. Okay, I know I've got these labelings there, but what I do first is always to identify what patterns we're getting. So here I've got this 1, 2, 3 waves. It's 3 waves, so I call it a W, and this connector, which is expanding flat, is an X, and now we're looking to complete this Y. Okay, so typically this Y will usually be equals to that. So there's a possibility that we get this drop and we go back up, or if we don't get that and this is the end of the sequence, this is what you will get. You will get this breaking out of here for the long term. So if we break out of this correction here, then we start seeing dollar weakness. Okay, obviously our stop is going to be here. So it means from here, if we break down to the if we break to the downside, we take the dollar trades and we put our stop over there. Okay, so let's go to Euro US dollar. So what I'm doing here on Euro US dollar, when we go to Euro US dollar, I'll be looking at this wave 4 as well. But this wave 4 is to the downside, it's a bearish one. We're looking for a down move on the dollar index. Okay, and then we're expecting that it will do something like this, while the euro does the opposite. Let's go to the euro now. Let's go to the Euro US dollar. Switch on that label. You see that here, I'm still waiting for that wave 4, but this time, this wave 4, I wanted to push to the upside. If you're looking at this here, this is the trade that we took just before NFP. This is the setup that we had last week. Let's just take it out. The trade is still running. So if you remember what I was doing with the dollar index, it's exactly the opposite of this. You get an impulse, you get this corrective structure here. Okay? And then you get an expanding flat as well here. See here, it's exactly the same expanding flat you had on Euro US on the dollar index. So what you would have here as well is this move here. Let's draw it properly. Let's switch off here. You get this move here. Giving you something like that. And that is a W. You've got 3 waves here. 1, 2, 3. That's a W. 1, 2, 3. It's a connector X. And then this Y here. Okay, so you can see here Euro US dollar is already broken out of this flag, confirming this that move that we still want to complete to the downside. So when this move on the Euro US dollar is being completed, that is that short move to the upside on the dollar index that we wanted. So the dollar index will be doing something like this. So when this start pushing out of here to go for that wave 5, the dollar index should be falling. Okay, so that's how we're looking at this one. So here we're already shorting, targeting this small move here on Euro US dollar. Actually, it's not too late to still take this one. It has already broken the flag. It's just confirmed here now. So you can take this one, but you're going to need to take profit quickly or put your stop to break even so that if it reverses on you, it does not take you out. Okay. So just to switch on the labelings that I have here. So that's what we have there. You have the 1, 2, 3 waves called the W. You've got an expanding flat that is correcting all that, WX. And then you have another one that will possibly do something like this. Okay. And typically that will be your target there, where this will be equals to that, equal X, giving you a nice WXY there. Okay. All right, so even if you check with the fibs, you need to check. So this is how I do this. So we've got 1, 2, 3. Connectors, I usually count them as 1. This axis, you usually count them as 1. So if you wanted to check where your wave is going to end, this is what you do. And back to X. Notice that I'm using the X. I'm using the extension tool. So if you are counting these waves, it will be 1, 2, 3. This one you count as 1. It's a connector. Then you've got another 1, 2, 3 there. Okay. Right. So then you have your 1, 2, 3. This typically retraces to about 61%. And this one, you usually find it at the 61% area. And this 61% is not a retracement, it's a 61% extension of this. So you can see that even though it is pushed out a bit, it is still retracing on the 61% to give us the final wave down. All right, so that's Euro US dollar. Right. See, it's already going down now. Right, so next one. While we're on the euros, let's do Euro CAD. This is the trade that I've just posted about 2 hours ago on our free Telegram group. We do Euro CAD, and then we do the rest. So I always try to show the rationale behind the analysis. Obviously, we cannot do all of those things here in just 1 hour. I see there's a question here. Okay, it's not a question, just a comment from Ravi, right? So this is what I'm looking at here with this pair. Let's switch everything off there. You've got this impulse coming from down there, and then it starts correcting like this. So you get this impulse to the downside. We're starting with the correction, but then this impulse is being corrected by something like this. And if you look at this is a typical regular flat. That's why you can see there. Let's get it thicker, bit thicker. You can see that the green is a regular flat, and regular flat, according to the rules, not the rules, the guideline, if this is your ABC in green, ABC, your C will typically end around the area where with A ends, okay, and your B typically where your impulse starts. So you get a clear regular flat there, and then you can see as soon as it completed the regular flat, it made an impulsive move to the downside. Okay, so what do we expect after this? You had this is the impulse, and that impulse, remember, is not being corrected by this green as yet. The impulse is being corrected by the whole red. So the red is impulse, correction in green, and then another impulse red. So this is the move that we're anticipating. What will that do? That will give you an A, and this is higher degree now, B. See how easy it is to trade if you know what you're doing. And that whole thing is giving you something like this. The impulse, 1, 2, 3 waves. See that the red is 3 waves. Here we just have a lower degree. So this is why we're anticipating this move to the downside. So now let's come here where we're looking at the trade. The trade is here. That's the first thing you do. You need to know where the direction of the market is. And then the next thing, knowing the direction is easy. Anybody can predict the direction. But the next thing is how you take the trade. What is your strategy? Because you need to have a strategy. As much as you know where the direction is, you need to know how to take the trades. Okay, so I'm going to clear all this and then come here and check what's happening, how we can trade this. Let's clear all, put back the labelings. So you see, when I put all this on, it looks all very complicated, but there's nothing complicated about it. It's just labeling the patterns. If you understand what the patterns, how the patterns work, how they interlink with each other, where they happen, then you're well on your way to understanding the theory. So I posted this one earlier this morning, and I said we should sell the breakout here. Okay, didn't give us a big flag. We got a small flag here. Okay, so you might still get a flag, quite a deeper flag, a flag that looks like something like that. On the 1 hour time frame, just look at it on the 1 hour time frame. We'll be selling this, targeting that downside there. So this can still give you something like that, like a deeper flag. And you'll be selling the break of that flag. Okay, and then we're going to be targeting that downside. Why are we targeting that downside? To complete that pattern that we just shown in red. So that's the trade that we'll be looking at this week to see that it confirms. It could confirm today or tomorrow. Okay. This flag was not enough here. It was too small. Okay. But there's nothing wrong with selling it because you could have sold it there on that flag. Could have sold there. Your stop loss is still safe above the flag. Okay, so let's go through the rest of the pairs. US dollar CAD. To US dollar CAD. Let's go back to the 4 hour. So US dollar CAD, there's still that big impulse move to the downside that we thought was going to go all the way to 155, but we know that the market does not move in a straight line. Okay, what we're having here is this crawling up like this here. Let's go there. This has been going up correctively, as you can see here, and we thought this was going to break and go down. But instead what it does is it just gives a deeper correction here, a regular flat in between. Okay, and then the move carries on there to the upside. So typically this may be equals to this. So what is happening here, you have got another lower degree correction here, which is sort of an expanding flat, something like this. Okay, so that could still complete this move to the upside. And then you will have something like this, A, B, C before this starts correcting or reversing. Okay, right now we are on this smaller degree correction. Okay, so let's see what's happening there. It is actually too expensive to buy it at this level now, but it looks like there's got a buy setup right now. Okay, so that is your expanding flat. Let's do that. See what's going on the 4 hour chart. So you've got that expanding flat there. See that you've got a reversal there. Got a reversal, and then it's given you a flag. It's broken out of this flag. Right, so you can actually take this trade to the upside, and after a couple of pips, you can move it to break even. You've got a clear impulse correction and another impulse. Okay, so this is ready to be taken here now. All right, so that's US dollar CAD. Let's do US dollar, New Zealand US dollar. So this one we've been tracking for the longest time now. And it looks like we may have just gotten our reversal after all. Okay, let's go higher, time frame first. So because it's important to know what the chart or the price is doing on the higher time frame. So this is the daily. Just quickly, just to show, we've got the impulse. Okay, this is a leading diagonal here. We have this leading diagonal in wave A that looks like a wave A. Initially what we thought was that this was an impulse and then it was going to make an A, B, and then a C. Okay, but it did not play out like that, but it does not change the structure. It was still an impulse. This will still be an A. You just put in the labeling there. This will still be an A, but the only difference is that our B is no longer here because we thought this was an A, B, and then we're going to get a C. Okay, but this B now will be here, and there's a reason why. I've adjusted it like that. Here's the reason. One, two, three. I should have done it in a different color. Let me do it with red. We've got 1, 2, 3, and this looks like a regular flat here. So I'm anticipating that we'll get a reversal here, and that will still give us a A, B, C. See that green. Okay. So then how do we trade this? So if we are looking for a reversal here, we need to come here. We need to come where the price is currently and see if there's any confirmation of a reversal. Because right now it just looks like a move to the downside. Okay, but if there's confirmation of a reversal, it will be confirming the completion of this three-wave move, which is our regular flat, and then we'll be looking for an upside here as well. Okay, let's clear all and come down here and see if we're getting that reversal that we're looking for. Most of us have already taken this in the premium group last week, and we'll show you why we took the trade already. Not going fast, but we're already in it. This is the daily. I'm going to go to the 4-hour. The 4-hour. This is the reversal that we're talking about. Has this confirmed? Let's have a look. We want to see if this structure is correction or it is reversal. Let's look at it. This is how we were looking at it. I'm going to go to the one, switch on the labeling here, see what you're looking at. So initially, what we got, you'll see how powerful these patterns are, and that's what we trade. Let's go 1 hour. Right, there we go. So we've been tracking this move. This line is exactly where B ended on the higher time frame. We'll go back to it and see and just show how that happened. So here we had an impulse to the upside, and after that impulse, this was not very clear at the time. Okay, but then we got that impulse, the correction, which is a expanding flat. Okay, then we got a 1, 2, 3 waves, and then we got a regular flat here. Can you see that we've got a regular flat there? So when I saw that regular flat, and when it ended and broke out here, said let's take the trade. We're taking it aggressively. See, on breakout of this trend to the downside, because we could see that there's a regular flat that is completed, and it was breaking out of this trend line. Let's draw it properly. I don't want to just scratch around. Just want to show it properly. So this trend line here. Okay, so obviously initially that trend line would have looked like it was broken here, but it would have taken you out. This is why you need confirmation to take this trade. But then it went up again. We adjusted the trend line to where it's supposed to be, which is here. And then when it broke out, we bought it aggressively here. Okay, now we're getting this big corrective structure again. This one here. It's another expanding flat. And exactly the same way that happened here, another expanding flat is happening here. Okay, it is breaking out here again. Doesn't look like it's going strong. It's very corrective. It may drop, but we're already on the trade, so we're just monitoring it. Okay, so we're just gonna monitor this one since we're already in there. So, but on breakout of this, you may wait for another 1 hour flag to confirm another entry on this one. So you see these similarities. Look at this one, exactly the same. Exactly the same. Obviously, this is the 1 hour time frame. This may just be the reversal that we've been waiting for the longest time. Okay, so go back to the daily one more time. Just want to show you where this line comes from, and this is exactly where it reversed after touching the line. And that line is where that regular flat in the higher degree would have completed here. Not because it's support, but it is because the pattern has completed. Okay, that's how a regular flat completes. And that's why we're anticipating reversal here. Okay, that's New Zealand, US dollar. All right. So you can see, just to show you where we took the trade. Not this one here. That was the downside. This was the plan. See, as soon as it reversed there, we were taking the trade aggressively. We're anticipating that move to the upside. Anticipating the move to the upside on New Zealand US dollar. Keep an eye on it if you want to enter. But for now, it looks like it has broken out of here. It made that larger flat that we was talking about. Now it's breaking out like this. Okay, so this can still be taken with a stop loss there. Okay, that's that's New Zealand US dollar. That was the plan. That's how we took it. As soon as it reversed. All right, so next one. Let's look at US dollar ZAR. Last week I showed how the structure has changed on this, and it looks like the ZAR is going to be weak for some time to come. US dollar ZAR. Okay, you can see this is how we have been looking at this all along. It's the daily chart. Big impulse, and then we started with the correction. That's what we have. And then we get this one here that is in the same direction of the impulse. The impulse is this one. Okay. Now the impulse to the downside. So as I said last week, this was the anticipation that we're gonna do this, we're gonna do this, we're gonna do that again, similar to that, and we still get one more down, but that one more down doesn't look like it's gonna come. That's why we have adjusted the count. So we're not gonna go to that 11 rand. We went as low as 12 rand 50 at some point around this area, but it doesn't look like we're gonna go down that area. So this was the initial count, and the initial count in the labeling was this one. The first correction is 3 waves, call it a W with a connector, right? And this was going to be a WX and then another Y. See here, we've got a 1, 2, 3 zigzag connector, 1, 2, 3 zigzag. That was the initial count, but that has changed. It looked like this swing to the downside has ended here. Okay, let's look at it. Let's look at the adjusted count. So the adjusted count is this one here. We are not going to get got W, X, let's do it clearly, X. We're not going to get this Y because this string has ended here. And this is how this is now playing out. Just playing out like this. You've got an impulse, you've got a correction here. Okay, so that looks like it is now your 1, 2. And within these 2, I'm going to do it with a different color, this impulse. Now you get 1, but lower degree. That's the difference between this one and this one. Here you've got an impulse 1 with a zigzag. Here you've got an impulse, lower degree 1 with a regular flat. So now we're anticipating wave 3 in green. Okay, we've got a projected area where we know how to project wave 3. We've added the rules to give us a wave 3. Okay, so we want wave 3 in green to end. So if wave 3 ends there, then we're supposed to get, let's just do this correction in pink. This one is in pink to show that it is lower degree than that one. So this one should be in pink as well to give us wave 4. Which wave 4? The green wave 4. Okay, so if we've got a green wave 4, we still need a green wave 5. And if we've got a green wave 5, then we still haven't even gotten the wave 3 of the red. So this 1, 2, 3, 4, 5 will complete wave 3 in red. Let's just circle it to show its higher degree. And then we should then get wave 4 in red, which may be a big sideway. Let's put it back there. Let's shift it now. There we go. So this one will give us possibly a big sideway correction there. And when that ends, then we complete the wave 5. And who knows, maybe that wave 5 could even take the top there at 20 rands. I think we went at 17 rands. That was the last time the US dollar ZAR went to 17 rands. That was in January 2016. Okay, maybe that wave 5 could even do that. Okay, let's just complete that. That could be our wave 5. All right, so for now, with US dollar ZAR, it's not safe to buy it now. Wait for this deep correction. If you get it here, then you can hold it up until you complete your wave 5. But for now, it's too expensive to buy it here. It's too expensive to buy. So you can see that this red correction is in the same degree as that one. We've got lower degree, which is in green. Okay, I've put the correction in different colors. That's how you trade. Okay, so no trade at the moment. Wait for it to correct. That's US dollar ZAR. Okay, if I just go to the 4 hour just to see what's going on here on the 4 hour, I'm expecting that it will push a bit higher because I want wave 3 to complete. Let's put on the labeling. Now the question is, if I don't use supported resistances, how do I project the turning points? That's why I always use the FIB tool. So we need to check the wave 3 should be above the 1,618. So wave 3 in red should end here at 1448. Minimum for it to be a valid wave 3. Minimum 1448 in US dollars are. And you can see here we're getting another flag. We will get this push to the upside. And after it gets there, then you start anticipating that sideways movement. Okay. All right, so AJ is asking if he's the only one with audio problems. Is there anybody else with the audio problem? You can just type on the chat box. Then maybe we can try and sort it out. But otherwise, it looks like it's only you, AJ. You need to sort your speakers or your phones there, your headphones. Okay. US dollar ZAR. That's how we're going to look at it. Wait for it to correct. We've done US dollar ZAR. Let's do pound. We're going to do the pound pairs now. Or maybe before we do the pound pairs, let's do another UJ pair. Okay. Let's do UJ. All right, so I'll show you here the long-term view as well before I go to the short-term, before I go to the lower time frame. So here's that big impulse. I show this almost every webinar I make. Almost every webinar I've been showing this pattern. Some of you who watch this every week are getting tired of this, so let's just do it. Impulse, correction, A, double XY. After that, you get a connector in the same direction as the trend. So I do it in the same color. You see that this is a correction, but it's in the same direction of the impulse. Remember, a correction is supposed to oppose the impulse. But this one goes in the same direction. That's why I call it that's the ones that we label an X. Okay, but then here, as I always have been showing this all along, we anticipated that we were going to get another 1, 2, 3. So this was going to make a nice WXY. But it didn't happen, eh? Because not all corrections are zigzags like this one. You don't always get zigzags. If you go through the last week's webinar where I did all the corrections, I was doing it so that if you're following if you're going to follow those webinars, you know the corrections I'm talking about. Okay, so it did not make another zigzag there. What is it doing? It is possibly doing this. So this is the top. One, 2, 3. This does not change the structure one bit. It is still a clear correction with a connector and another correction. It's a double correction, WXY. That is the wave theory. You've got an impulse and 2 corrections in combination, double, 2 of them. You can see that this correction is in the same degree of this one. This one is a zigzag. This one can be a regular flat, or if it pushes up here beyond this, it can be an expanding flat. There's that possibility. And you can see here, divergence, and this is on the 4-hour. As much as the price keeps going up and up, the indicators showing us way ahead of time, way before the drop, that there's no momentum to the upside. So US dollar JPY will drop. So last week, it looked like we had some sort of a sell setup, and I said I gave you caution not to sell US dollar JPY because of this, which I'm going to show you now. So let's look here why why it was not ready to sell yet. So I'm going to clear everything here and just come focus here. Okay, let's clear that. This is the 4-hour. So look at something very interesting, and I'm going to show you this, that this is not happening only on the one pair, fractals. So that is that last move that we want to drop to the downside. You see, we know that it wants to drop, but when does it drop? So here's what we have here. We've got this impulsive move to the upside. Look what happens there. What happens there? You get this expanding flat. This expanding flat is similar to the one that we had on Euro USD and the dollar index. Look at this one. And look how it would have fooled you to think that you are going down. Okay. I'm going to show you how it would have fooled you, especially if you trade support and resistance. You would have thought that here you're getting something like this. So when I saw something like this, I noticed that there is no such pattern. There's no pattern. Elliot does not identify a pattern that looks anything like this. What is it? What is this pattern? It's none of the patterns that we discussed. So when I looked at this, the only thing that I wanted to happen was that this will do something like this, to drop here. Then it will complete at least a regular flat. But because it has already broken to the top as well, so I expected to have an expanding flat. So this, even after it broke here, looking like we've got a flag and we're ready to go down, I could see that this is a corrective structure after an impulse. This is why I would never have sold this thing here. You've got an impulse and then you've got a correction. After correction, the direction should be in the prevailing direction of the impulse. So most would have sold this thinking that it's going down. And that's what they do. They make you look so attractive to you to take the trade. And you take the trade, as soon as you take the trade with the masses, it reverses on you, takes you out. And you're probably going to put your stop loss there. And then it comes and takes you out. Okay? So we're not done here. Look what happens again. The exact same pattern that we're talking about. See here, the expanding flat. We get another impulse. Very interesting. We get an impulse. Look what happens again. The exact same scenario that happened here. We had this. We had, let's do it clearly. We had this again. And then again, exactly the same scenario that happened here. This pattern, it's not in the wave theory. It's not in the wave theory, so we would not have sold there. So what is happening? 1, 2, another expanding flat. What happens after an expanding flat? After correction, the move should be up. But how far will this go? Now we're getting divergence. So you see, you would have tried to short it there. You would have tried to short it there, take you out. Okay? By the third time, you're not thinking, no, you're not going to take this thing, and then it actually drops without you, and you just watch it go. That is why you need to understand the waves, because the market moves in waves. Okay, so this is exactly the same as that. So how will you trade this? You need to wait for, I don't think this impulsive move will go all the way, especially because of divergence. And this has been going up very slowly. There's no momentum here. The higher and higher it goes, this indicator is just going down. So when you get an impulsive move to the downside like this, and you get a correction here now, that is better confirmation that this is ready to drop for many, many pips to the downside. Okay? And you need to have a strategy to take this. Okay, so talking about this expanding flats, let me show you another example on Euro US dollar. Let's go Euro US dollar. Exactly the same scenario that has happened previously. Okay, this is not a setup, just showing the scenario that has happened previously, where some of the support and resistance traders have been posting a short, and I was never selling the pair because I understand the structure. You've got an impulse. Okay, what do you have? Impulse, correction, impulse, and that pattern here. Switch off the rest. So undo. Okay, let's switch it on. make it thick. And that pattern over there was a nice expanding flat. What happens after the expanding flat? It goes. Okay, for all these pips here. Okay, but because you were thinking that this is going down, it has broken what do you call a major resistance zone. Now you'll be selling this. Okay, so you need to understand patterns and how to trade them. Okay, so this was never a short. So you would see here, you would have been getting something like this. This is not even an ending diagonal. This pattern does not exist. So this had to drop first, yes. You could have, if you sold it here, then you could have gotten a few pips, but it would have come and taken you out with this one. And I'm sure you would not have wanted to try to short this again after it took you out like that. Okay, and then he actually does this 1, 2, 3, and then we get the move to the upside. Okay, so that's what happened a couple of days back. But then where are we now with Euro JPY? Let's put that on. So we are at the end of the cycle. I'm anticipating reversal. So here's the thing here again. Let's do it with a different color. You got this impulse, you got a 1, 2, 3. Right, so after the 1, 2, 3, you've got another impulse. Okay, so if this is completed, you can see now, let me do this with without all those things, with my labelings off and clear, do it cleanly. Right, so I'm saying the end of the cycle there. After the end of that cycle, you are getting a corrective structure. Then after that, you're getting this 1, 2, 3. I explained last week why I'm taking this as a 1, 2, 3, taking these two swings. So I'm looking at the degrees. Degrees is sizes of the waves. Something that you need experience with to be able to understand. So now it looks like we're getting this impulsive move to the upside. Okay, so what is this? We need to monitor what this will do, because what can possibly happen here is this one. It's this here. So you can get this doing something like this, come down here, okay, come up there, give you this corrective structure. Whatever structure it will be, this will be correcting this, and then we'll know that then we are ready to go. Okay, so I'm anticipating a bit of a sideways correction here. What structure will form here, we'll see as it plays out. So let's wait for this one to form a structure, but if it keeps giving us these flags, we are going to take the trade, so that if this does not happen, we drop with it, because I'm anticipating that this will drop now, same as the rest of the year-end pairs. This is Euro JPY. Okay, so let's do the pound pairs now. But before I do the pound pairs, let me do another yen pair, which is Chief JPY. Okay, I'm just going to do this one quickly. So as I always say, don't let all these labelings, counts confuse you. The brain works in color, so it understands and can comprehend shapes and colors better than text and lines and all those things. So here we've got an impulse. What is happening after the impulse? We get another impulse. And I'm thinking that this is what is going to happen here. We've got a jumping. We've got a green that is going to complete this here, giving us a regular flat. See there. And then maybe then we get that red to the downside. And this makes sense because most of the time the chief goes with the euro pairs. And remember, on the euro, we're anticipating that we're going to have this. We want this short move to the downside to complete before we start that wave 5 on euro US dollar. So we're getting this flag here, which you can sell for this short trade to the downside if it breaks to the downside. Okay, so you can short this one and then move it to break even when it comes to this level, because that's where it might start reversing to give us this regular flat before completing that 1, 2, 3. Use a bigger WXY. Okay, that's Chief JPY. Right, and then last of the yen pairs is Audi JPY. Let's do Audi JPY, and then after that we do the pound pairs. Where's my Audi? Yes, here it is. Okay, that's Audi JPY. How are we looking at this one? So Audi JPY, since we are bearish on the rest of the yen pairs, this is what it could possibly do. We could have a bit of a correction there, bit of a drop there, go up there, take, and then go down. So we may still have some sideways here movement, sideways correction before we get the real direction of the market. So we're gonna get something like this: 1, 2, 3. And then if we start dropping, and then we get a flag here, then we're gonna be selling this one, and that will give us this 1, 2, 3. It could even expand there. Remember, Euro JPY expanding flat. It could even come down here. First target is here. It could come down here before reversal. Okay, that's Audi JPY. All right, switch off. Next one is the pound pairs. Let's do the pound pairs. So the pound pairs, we had setups last week, Wednesday, day before the BOE interest rate announcement. So let's look at all these pound pairs. So this is pound chief. So pound chief, we had this impulsive move upside to the upside, which we had labeled, and so that we had completed it with at 5 there. So after 5, we know that you need to get a correction, ABC. Okay, right. So when it broke out here, I was anticipating that we're gonna get a expanding flat. Okay, so we actually got that drop right after it pushed out of here, out of the end of this impulse here. And now you are getting this nice flag here. When it breaks to the downside, you can sell this. Okay. But as I say, the market does not move in a straight line. You could even get this doing something like that, doing that first, coming down, coming then up there, giving you a 1, 2, 3 before it drops. So just anticipate all these moves here. You can get that before it drops. When it drops here, you just wait for a flag and then you take it all the way down to come and complete your regular flat or expanding flat. 1, 2, 3. Okay, that's pound chief. So it's one of the trades that we were taking. So the question about whether I trade fundamentals in the news and all that, I always say that I don't ignore the news, but because I do not have information and nobody knows until the news is released, the only thing I can trade is the chart. So if you're looking at pound chief, this was the setup we had in our group. We knew that it has already broken the top, so we're just waiting for it to drop. And as you can see, we got that drop now. And now we're getting that, we got that drop, and now we're getting that correction here. And then that will now complete that one, expanding flat. So did I know what the Bank of England was going to do with the interest rate on Wednesday? This was Wednesday. I didn't know, but I could see what the chart was doing. Okay. The only information I have is the chart. And logically, common sense will tell you that if they're increasing the rate, which they did, they increased the rate on Thursday by 25 basis points. So you would expect the pound to skyrocket. So regardless of what the data is released, they increased it, but it dropped. Why? Because that's what the chart was saying. The chart is an incorporation of market data. It's already incorporated in the chart. Whatever they're announcing is just going to confirm what the chart is already doing. No one announcement is going to change what has been incorporated for years. I do not have magic. I do not have inside info. That's all I have. I only have the chart. And we were selling this in our group. Okay, so that's how you trade fundamentals. Let's look at the rest of the pound pairs. Pound New Zealand. Pound New Zealand, the same as well. So we'll just see if I still have the setup for Pound New Zealand, that we traded. You can see here as well, Pound New Zealand, we're anticipating a drop. Okay, we're anticipating a drop before the BOE. This was also on Wednesday. But I know that we are on wave 3. The last week before, on the Monday webinar, we said we have completed the wave 3, and now we needed to complete wave 4 in yellow. So even if we did drop on the Pound New Zealand, I don't expect that it will drop all the way. It was dropping just to start a wave 4, the sideways correction. Okay, so let's look at Pound New Zealand now. Okay, you can see that is that drop that we got. This is where we were before the BOE announcement. Then we got that drop. Okay, so why am I anticipating a sideways correction? Let's look at it higher, time frame. It's clear. If you remember how the US dollar ZAR trade looked, it's exactly the same here. I'm going to switch off this so I can do it with you. Impulse, correction in red, 1, 2, 3, giving you expanding flat. But then you get another impulse in the lower degree. Let's make that correction in pink. 1, 2, 3. Okay. What do you get again? You get another impulse in green. Okay. I explained the type of correction that we got with this one last week. So we have down, down, trying to find another color that we have not used before. Let's say blue. So here we thought it was going to be 1, 2, 3 initially, and then we will go, right? but then it doesn't do that. We got an impulse, and then this correction starts with an impulse, but this impulse needs to be corrected, and it was corrected by this 1, 2, 3 here. Okay, and then after impulse, correction, impulse. We got the impulse, so we knew that we needed to get to the upside, and we all got 600 pips in just 2 days on this one, because we understand what was going on there. And that is simply 1, 2, 3 with a B in the middle there. Okay, so what happens after that correction? Another impulse in green. So let's label this now. So the first one is 1, 2. Okay, but after this 2, we get another one here inside, which is 1, 2, but it's in the lower degree. Let me not circle it. 1, 2, 3, 4. Now 5, which we thought was completed. That is why I was saying we need to get a drop here. Okay, so what color correction are we going to get here? We need to get the same color as red, because now we're correcting. Okay, so now let me just complete that labeling. 1, 2, 3. You see the 1 is corrected with the red. The 2 needs to be corrected with the red as well. So I'm anticipating that we're going to have a sideways correction. Same way we had the sideways correction here. That took forever. We may have something like that here as well. Before we complete that wave 5 in yellow, because we still have wave 5 in yellow, before we can actually say that this swing has ended. See, lower degree in green has completed, but we still have 3, we still have 4, we still have this 5 to complete. So no trade here at the moment. I'm anticipating a big sideways movement here. But if you get a flag here, take it, put stop to break even, see what it does. But if it goes back and takes you out, that's fine. We know we are waiting for this to complete. Right? Pound CAD, same as well. Same as the rest of the pound pairs. We're anticipating a drop as well on this one. You see the setup. If I got a setup, you have pound CAD. Yes, we've got pound CAD. You can see that we're anticipating a drop on all the pound pairs. What happens? We got the drop. But why were we anticipating the drop? Not because we knew what the result was, but because the wave count was telling us that we have an impulse, we have a correction A, correction B, and then a correction C. And then after that, we needed to drop. And we did drop, so now we are correcting. So this pound pairs may give us some sort of a deep correction, or not necessarily deep, but something like this. Keep crawling like that. So I'll do that. We'll do it in yellow. We could keep crawling like that. Maybe even drop, get something like this. Get something like this before you drop. But if you get something like this and you start getting a flag here, then you know that it is ready. But this could take some time. Okay, so it's not just a matter of we got a drop and now we need to sell again. So we need to get a deeper correction. This has already ran hard, so we need to get a correction like that. Could be a regular flat, any type of correction that we've had. We discussed last week. That's pound CAD, pound Audi, same. We're anticipating. Actually, pound Audi was the only one that I thought we still had upside prevailing. So same thing that is happening here with the rest of the pound pairs. You can see here, I'm anticipating that we may get something like this, push higher, something like this, maybe even come back up here before we drop. Or this can actually just, this one could be very interesting here, like this, because as I said, pound Audi, the sequence to the upside was actually not completed. So this is the possibility here. You see here we've got this impulsive move to the downside. We don't know if this is the reversal. So this is how we will know. So this can do something like this. Keep crawling, tag or break, whatever it does. Give us this correction before we go and complete, because my overall target on pound Audi was 76, 1,7689. So this may still crawl up to that level or go all the way straight, but mostly it will just do this 1, 2, 3. That's how we focus the waves. Let's clear all that. Did pound chief, pound JPY, pound JPY, same. See, all the pound pairs were confirming the same thing. With pound JPY. This one was sent this morning, that you can still take on the break of the flag. And the one before BOE, not this one. This is just the 1 hour of the trade that we're looking at today. Pound JPY is this one. This one was the one before before the BOE. So you can see I thought it was gonna come take the top there before reversal, but it just dropped. But we were anticipating it anyway. Okay, let's go back. Let's go back there. So now we're getting this flag on the pound. Well, that's what we have. Impulse. 1, 2. Oh, my pen is all over the place. Let's clear all that. Impulse. Correction 1, 2. Now we anticipate down. Okay. So we're forecasting down. All right. Let's clear everything. That's pound JPY, pound USD. Right, pound USD, similar to pound's chief. There was your impulse. Then it was your start of your correction. It looks like it was going to be an A. And then now you get this 1, 2, 3 before you drop to C. That's why we're anticipating the drop at the pound, even though I thought it was gonna crawl up a little bit before it actually moved down. But as soon as the interest rate decision was announced, everything just dropped. So this is why we're anticipating a downside on the pound on this pound pairs. We just need to wait for this corrective structure to complete. All right, so that's pound USD. Pound CAD we did, pound New Zealand we did, pound Audi done. I think that's all of the pound pairs. The 2 euro pairs that I'm looking at currently, it's Euro New Zealand. Okay, so Euro New Zealand has reached the end of the cycle. If you've been following this, we've got a trade that we took from here. And then we got this whole curveball there. Okay, we took it there. So wave 5 has completed now. So now we need to see if we're going to get a drop. Okay, so we already got the impulse to the downside, a correction, and then another impulse. So this is what I think will happen here. You should get something like this, a deeper correction to confirm that we are now ready to go down. Okay. So talking about correlations, you see this is a euro pair, but this one versus the New Zealand. On euro US dollar, this is where we are on this pair. Undo. This is where we are. Okay, we are here. I track this pair from somewhere around here, waiting for this move to the upside. Okay, and this is how we took this trade here. We took it on equal legs, 1, 2, when this one here was equals to this one here. That's why you can see there, got this blue box here. That's where we took the trade and got all these 600, 700 pips here to the upside. So same thing will happen to Euro US dollar. After that wave 5 completes, you can see I've got this WXY here as well. Okay. So now we're anticipating downside because wave 5 is already completed there. So that's Euro New Zealand, and there's Euro Audi as well. Let's do Euro Audi. And then we do gold. Maybe one more gold and S&P 500, and we're done. Okay. So pound Audi. Pound Audi, you've got that impulse to the upside. You're getting this 1, 2, 3 waves there. You can see this one completes exactly at equal legs there, and then you drop exactly at the equal legs. If you project this line and this line, they're exactly equal. Get that equal legs, you get the drop. So you need this corrective structure here. Let's check this corrective structure, see if it's ready to go down. So let's look here. We may get a nice trade there. Let's look here. So if this is all of this correction here, you can see you've got the impulse, and then I've got a 1, 2, 3 running flat in this case. 1, 2, 3. You can see that this one breaks the end of the impulse, does not even break the A. Does not even come to the level of A. Okay? So if this running flat has ended and we are ready to go down, you need to wait for something like this again, if you have not taken this trade yet. You need to wait for a flag, and then you keep selling. And then if it breaks this here, makes a correction, we're just going to keep selling this one for some time to come. And then gold. Let's do gold. Okay. Do gold one more time, higher time frame. Let's do higher time frame on gold. Switch everything off. Right, so that's our gold there. So you can see here we've got an impulse. This is the impulse, and we are busy correcting that over there. So let's understand this correction here, how it's playing out. So this is how I'm looking at this. Higher degree, I'm looking at it like this. This swing gets corrected by this here. Regular flat, and I will anticipate that this swing will be equals to this one here. Okay? And then lower degree, 1, 2, 3. Lower degree, 1, 2, 3. Where are we here? It looks like we're on the yellow degree. We want, no, not the yellow degree. So let's go to this string again. Go lower degree, 1, 2, 3. You can have 1, 2, 3, 4, 1, 2, 3 here again. 1, 2, 3. Everything lower than the yellow. Everything here lower than the yellow gives you a trade, gives you a 1, 2, 3. Okay. Here again, so you can see that the green is only just completing the red swings. 1. Well, the green is completing the yellows. So here we are actually on the yellow. You can see that we've got a yellow completed there. So which means what we have here is this yellow that needs to complete here. So under the yellow, what is under the yellow is the green. Under the yellow is the 1, 2. What are we anticipating? We're anticipating that this green, yellow, with this green will be equals to that. So when we project that, we're projecting that around the 1244, around the 1224 area. That's where we'll be looking to buy gold. And this makes sense because we're still waiting for this short move for euro to drop. And on gold, we're getting the same thing as well. Okay, so now once you've done that, labeling is quite easy because you've identified the bigger zigzag in the higher degree, W, X, Y. You've seen me do this a couple of times. And then the lower the degree is W, X, Y. I'm not going to put in the Y there, just so not to clutter. Lower than the yellow, W, X, Y. And you can do this lower and lower, lower and lower, lower and lower, up until where you want to trade W, X, Y, which means now we're currently on the Y, and this Y still needs to complete. Okay, so we want the Y there to complete. What will that Y do? It will complete this yellow like that. But notice something there. This yellow this side was a zigzag, but this yellow this side, because it has already retraced, I'm anticipating if it reverses here, then it will be a zigzag. But if it retraces over to this level or around this level here, that could possibly make a regular flat like that. So essentially that would just be, let me not use that color there. You can see that it's a regular flat. And over there, you've got your yellows. See the yellow, W, X, Y. Do it again, show it again. X, Y in yellow, being represented by the red W. Same thing here. This is a W, X, Y. So what you would have is a zigzag combined with a regular flat or an expanding flat, whatever it will be. Okay. And that will give you a 1, 2, 3 on gold. And my target is still 1276 on gold. Or not 1276. Let's see, 376. My overall target. But after I get this setup here for a buy. Okay, so that is gold. And lastly, S&P 500. Okay, but before we go to the S&P 500, let's just look at this trade that is playing out here. It's moving pretty slow. This is the daily chart. Let me go to the 4-hour. You can get that small move that we still want to complete to the downside. You can see it keeps giving you these flags. Keeps giving you flags, and now it's giving you another one. You can see it's giving you another one. You keep selling that. It gives you a flag. Keep selling and take profit quickly because we're anticipating a reversal here. See here, it gave you this nice one. It dropped, just keeps dropping. Okay, so that's how we're looking at gold. If there's any pair that anybody wants me to look at, just one pair that I did not look at here, you can just type it on the chat box and we'll look at it. Lastly, S&P 500. This one just keeps on crawling and crawling to the upside. See, we are at the end of the wave 5 here in red. So you know the rules. If you read Elliot Wave, you're supposed to get a divergence at the end of wave 5 for it to be a valid impulse. And we are getting that divergence here. So at some point, this, as much as it's doing higher highs, lower highs and lower highs, the indicator is going down. So at any stage here, we're going to get a drop here on the S&P 500. So just keep monitoring this. If you get something like this and then a flag, then you can sell it to the downside. Okay, only up until this trend line, and then you see what it does, because that could just be an A, B, before we get a C, or whatever we're going to get after that. Okay, so we sell it up until the trend line and observe. So that is the S&P 500. All right, thank you very much for attending this webinar. I see there's no questions on the chat box. Everybody is happy. Wishing you all the best for the trading week ahead. If you want to get hold of me, my email address is vmanena, that's VMANENA at gmail.com. That's my email address. You can email me. If you want to call me or text me or send me a WhatsApp or a Telegram message, my international number is +27. You type it as it is on your mobile or whatever device you're using, +27 82 79 6 6 3 2 4. Okay, that's where you can find me. You can also find me on Facebook. My Facebook name, you just open Facebook so you can see. This is me over there. How do I check my profile then? So those are my names on Facebook. That's Ndibuo Victor Manena. You can inbox me or text me there. Our free Telegram group is here. It's called Trading Waves. And that is the address there. t.me/trading_waves. That's a free group where I send about maybe a chat or two per week. Okay. And then we've got our own trading room over there where we post all these analysis for our members. Okay. Wishing you a great trading week ahead. If there's no more questions, I'm going to pause the recording. If you've got any other questions that are not related to trading, maybe you want to ask about the course or whatever, you can do that after I've posted the recording. Okay, enjoy your week, guys. Cheers. Bye-bye.